How's it going? Welcome back. It's Jonathan. Now, in this video, if I can actually hear myself in the recording, we're going to be doing another walk and talk. I might have to turn the camera around and focus in front of me if the wind is too hard, alright? So today's walk and talk is actually going to be, if you can actually see where I am, leave a comment below and we'll see if you know exactly where I am right now. The game plan for 2026 out to 2032. So it's up to you if you follow any of this or not. It's totally up to you. This is just my game plan and exactly what I'm going to be doing. Let me go ahead and turn it around. Right, so the idea of turning it around is hopefully I can block off some of the wind and give you something nice to look at than my face. So the game plan for 2026 out to 2032. Why such a long time frame? Well, if you've done the McWhirter program, you'll know exactly why we've highlighted that time frame out there. And if you've been following me for any period of time, you'll know that 2026 is on the hotspot for the time period that we are watching for the beginning of the next great crash. Alrighty, so how do we time the next great crash? Well, the first thing we need to do is we need to be looking at two things. The first one is the 18.6 year lunar cycle, which is based on the North Node. So again, refer back to the McWhirter program if you're going through that at the moment. And the second one is we need to be referencing W. Gann's mass pressure chart. Now, McWhirter's theory would suggest that when the North Node moves through Aquarius, we are at the beginning and the end of the cycle. Actually, the beginning is when the North Node moves through Capricorn, but we should be looking for the beginning and the ending of the cycle to occur. Now, actually, the North Node moves through Aquarius in 2026, so that is why we would highlight 2026 as a hotspot to be looking out for. The next thing, like I said, is we need to be monitoring the financial timetable, which was originally developed by W. Gann. The original version ended in 2007 or 2008. And if we upgrade it or calibrate it out to 2100, we can also see that we should be looking for major stock market crash, real estate crash, etc. My version is actually recalibrated to be warning of a potential crash from 2025 onwards. Does that mean, sorry, just move away from the noise. Does that mean that we should be looking out for a crash to occur in 2025? No, it is. The financial timetable is merely a guide, just as the North Node is. However, both rely on the 18-year cycle. So, I'm not going to go into too much detail on the actual building of the financial calendar. Instead, what I wanted to talk about was the time frame, because the financial timetable would suggest that we would be looking for a major panic crash to be approaching in 2025, and then that would lead to 4 years of falling stock prices, depressed real estate prices, deaths of people, and so on. I don't want to really scare you or anything like that. That is what exactly we'd be looking for. So what does that mean? Well, in layman's terms, that means that we should be looking to de-risk our portfolios and de-risk anything that we're over leveraged on if possible. So what I'm going to do now is I'm going to go through my game plan, or what I've been waiting for to occur between those time frames, just to give you an idea on what I'm looking at, so you can get an idea on what you should be looking at too. Now, the reason why it's important to be de-risking any over leveraged assets such as property, or if you're loaning against stocks or crypto or anything like that, is because with interest rates rising, that's going to generally depress the asset values prices as more people start to sell off because they can no longer actually afford to hold those loans. So interest rate rises generally depress asset prices. So the reason why that would be important is because we're looking for catalysts or reasons why markets will be declining, and how much so. So the first one we need to be looking at is interest rate rising. Now, if the property market crashes, if the stock market crashes, and interest rates at the same time are also rising, which they generally should be in a rising interest rate cycle, is it would be putting more pressure on more people to be selling their assets. So what we have here is we have the catalyst of the lunar cycle moving through Aquarius. We have the 18-year financial timetable predicting stock market crash, depression, etc. And now we have interest rate rises. So we have three issues to be looking out for. So what is one of the other catalysts that I didn't actually explain when I was talking about the financial timetable and why you might not want to hold debt? This is one thing that a lot of people don't understand. Let's say you've got a $500,000 mortgage and you're currently able to service that loan at the current interest rates. Yes, that might be possible. Let's say interest rates move from the current value or the current point of, let's say, what are they, around 5% at the moment for mortgages, 5-6%. What if they move up to 12%? Okay, very real, not impossible. So very real figure there. So mortgages go to 12%. More people are going to be in mortgage stress, etc. All right, now let's put the catalyst in that we don't just have interest rate rises, but we also have a major financial crash. Now think about what happened during COVID. A lot of people lost their jobs. All right, now that is meaning that if you are servicing this mortgage yourself, can you afford a loan with 12% interest if you no longer have a job? All right, let's say you put yourself in a position of you rent out your properties. Well, is there a guarantee that your tenants can actually service your loan if they don't have a job? A lot of people, remember, a lot of people when COVID occurred, a lot of people relied on their landlords to decrease their rents. They relied on their landlords to defer rents, especially for commercial real estate. So now we've got the catalyst of rising interest rates. I'm going to keep repeating myself because I need to get you to understand my whole thought process here. And it's very bearish, okay? The future that I have in my mind for out until 2032 is I would go for the bearish stance before I go for the bullish stance, and that's more of a protection mechanism, okay? So just repeating it, rising interest rates, property is declining. You might be able to service your rates at the current rates, but can you service it if they double? Can you service your mortgage if you no longer have a job? Can you service your mortgage if it's being rented out and the person who rents it out no longer has a job? And if the person who you rent it out to no longer has a job, that mortgage responsibility is now yours. So can you service whatever you're paying now plus your mortgage? Okay, so just think about all that. The next one after all this is the war cycle. That is Uranus moving in through Gemini around 2026 with Mars around July 4th, 2026. That generally and historically has activated the war cycle, civil war or international war, involving directly the United States of America. Now, if we get a repeat of that, so that is if we get a direct repeat of the war cycle activating in 2026, what is that going to have on property prices and stock prices during, again, at the point in time we are expecting a major financial crash, okay? Now, all we can do is go back in history and see what occurred in the financial markets during war. And generally speaking, the markets held up pretty well during war, but there's no guarantee, and we don't exactly know what the effect on the market is going to have this time. All we know is that there's a potential catalyst and we know a potential time frame, and we have to just put it on the cards, okay, of what could potentially occur. All right, now to complicate it even more and to get even more, I guess, depressed on this whole situation, depressing, we got the flood cycle coming in. Now, as you already know, during 2024, much of the world went under. You had a lot of Europe go under, you had India go under, but this is only going to get worse through 2025 out to 2029. So we have another catalyst that we're looking out for. So we have the flood cycle ramping up, and it is expected that parts of Australia are about to go under. Of course, it doesn't look like it now. You look at the sky, beautiful sky out here in Australia. It doesn't look like there's any flood cycle occurring right now, but all we can do is wait for that cycle to roll through and then look at the effects of that cycle. There is rumors, or there is those who are actually very deep into studying the flood cycle, suggesting that much of the Sunshine Coast is going to be underwater. And they're actually predicting, if you're in the Sunshine Coast at least, 6 to 9 meters underwater. And that's estimates, okay? It could be even higher than that due to all the infrastructure building that they have going on, okay? You've got to remember, when it flooded 200 years ago, if we got 5 meters of rain or 5 meters of flood waters after much rain 5 years ago, and all that water started off going into the land and then out into the oceans, well, now we have it all going onto roads, okay? It's all going onto road and into drain systems. Can those drains put up with those flood waters? That is the only extra or additional catalyst that we need to be looking out for to then understand if these floods are going to be higher than they are forecasted to be. That would mean, like we had in Brisbane, yes, I've just told you where we are, in Brisbane in 2011, when much of, I was actually in the floods at that time. I lived at Indooroopilly, and Brisbane went underwater, and for the most part, that was disastrous for the local economy. And many businesses were underwater, many houses were underwater, but we're heading into those flood periods again. So I just want you to keep that in mind, that these floods are going to be greater than anything we have witnessed. They're talking the Great Flood. Now, I'm not talking Noah's Ark. I'm only relaying someone else's forecast, but it's something that I'm also now pretty interested in monitoring moving forward. So now that we know all that, well, let's add another one to the mix. Let's talk about crypto let's talk about crypto before we get onto the things that I'm looking at doing. So I'm just talking about all the warning signs that we have piling up right now. Look, I'm probably going to be very wrong on this. This is just my opinion only, but I do think that cryptocurrency is going to be the catalyst of the next crash. I know that is uneasy to hear, especially for all the crypto bulls out there, but you just have to go back in history. It was stocks in the past. It can only be a new invention or some new feverish technology that everyone's running after now. It's not tulips, it's not gold, it's not stocks, it's not property. Again, property was 2008. Now, what's it going to be? It's probably going to be the great Bitcoin crash. And you look at the things that are occurring with was it MicroStrategy and the way that they are accumulating en masse cryptocurrency, Bitcoin specifically. Again, they could be the smartest people in the world, and they could actually make this work and become, you know, the biggest hedge fund or the biggest fund ever. They could beat BlackRock. They could be the biggest and best and smartest company in the world. Or in about 2 years, something occurs. They don't sell. They borrow against their debts even more, and the whole thing just crashes, and everyone is suffering. So what would be the reason why I'm not overly bullish on cryptocurrency is for that reason. Now, that doesn't mean I don't own some. Yes, I have. Let's just say I have a handful. Okay, I don't have a lot, not as much as I probably would have wanted 10 years ago. I've got a handful now, and whether I keep it or sell it, I'm not really phased. Okay, I'd be more interested in regulated markets than unregulated markets for the cryptocurrencies. So couldn't care less if it crashes, to be honest. We're only looking at the catalyst here, and we need to find out what is going to be the next great catalyst. So if you look on all over the internet, everyone's telling you that we're about to move into one of the biggest property booms of all time. And I'll be honest, if you are worried about missing out, if you're actually worried about, let's just move on. If you're getting FOMO or feverish about missing out on the property boom that is coming, there's some somewhat, quote unquote, that call themselves affluent property investors out there, or property spruikers out there, that are saying in the next 100 days, this is going to be the last property boom of the 2020s. You probably heard that ad on your social media feed. We're in the winner's curse phase, okay? Yes, there is going to be a property boom in the winner's curse phase. It's what happens. Markets go up in the winner's curse phase. People pay more money, okay? But you don't want to be buying into that. You want to be selling into that. Does that make sense? You want to be selling into the winner's curse phase and not buying into the winner's curse phase. Especially if you're buying in areas which are going to be possibly going down in value due to floods, market crash, etc., war. What's going to happen to property when we go to war and Russia start just hypothesizing various ideas right now, and Russia starts sending nukes around the world? Okay, what is the effect on property value? Property, there has to come a time when people's interest in life over speculation gets reset, and we're at a time period now that I think that's probably more important than speculating on property. Now, don't get me wrong, I'll give you my game plan very soon. There's just some ideas, okay? Alrighty, so let's talk about my game plan. Now, what a beautiful building. Let's talk about my game plan. 2025 and 2025, I'm for superannuation, moving superannuation into cash. During 2025, I'll start to transition it, and hopefully, if the market hasn't crashed in 2025, which I'm relatively bullish in 2025, end of 2025, I am happy to move to cash. Even if the market continues to rise through 2026, maybe even out to 2027, I'm happy to sit in cash for the 18-month period. Okay, so 2025, super in cash. That is what I'm doing. Cash and gold. I need to accumulate lots of cash and gold, whether I accumulate that through business or whatnot. Cash, gold, not so much silver. I've got tons of silver, like a lot. I rode silver during the last bull market during 2011. I never sold, so that was always going to be a retirement plan for me. And whether I'm 60 when I sell it, I'm not sure, but gold and cash is what you need. So right now, what I would not be doing is I would not be buying any property. I don't think property is going to stand up that well, given what could potentially be on the cards for us. That doesn't mean that property is not going to stagnate and just stay in the same price. I think more so the property price could be falling more so than rising over the next 4 to 5 years. Okay, that doesn't mean it's not going to rise in price out to 2026, out through the winner's curse phase, but I would be more bearish than bullish post 26. Okay, so again, let me just repeat that if you haven't taken notes. Cash, moving silver to cash, moving superannuation to cash, which is just, I guess, like a 401k or whatever the equivalent is in your country. I'm moving that from high growth or geared investments into cash. Lots of cash and precious metals. I've also accumulated a lot of pink diamonds, so Agar pink diamonds. I've accumulated a lot of those too. I believe that they're pretty good investments. I could be wrong, but I'm happy to hold them for 10 to 12 years or so and see what the valuation of those occur. I started buying pink diamonds back around 2014 when I used to listen to a guy called Harold Siegel, who eventually got put under through a crypto scam, unfortunately. It was one that introduced me to pink diamonds back in the day. So I do own, I wouldn't say a lot, but I own enough that I'm pretty comfortable on them. Cryptocurrency, you could have a store of cash in cryptocurrency, whether you own, 0.1 Bitcoin, $10,000, $20,000 in Bitcoin, just in case, just what if. Unfortunately for cryptocurrencies, they're not much of a safe haven more so than they are speculative, all right? So your $10,000 could turn out to be $100,000 or it could turn out to be $0. That's the nature of the game with cryptocurrency. So that's why I would stick primarily with cash during a crash and gold over cryptocurrency. So yeah, that's probably roughly, the wind's come down a bit, that's probably roughly my game plan for the next, at least from 2026 out to 2022. Bullish after next year. Be probably putting out a lot of bearish calls, and it could prolong indefinitely with Trump in the White House. But if we can separate ourselves from what we believe to be true and just go back to the basics, when McWhorter would say there is no administration that is more powerful than the cycle. So she would say there's no administration that is at fault for the crash, and there's no administration that is to be commended for the booms in the market. They happen on their own accord and according to natural laws and natural cycles. I think it would be important to just accept that and understand what time frame we're in. And once we know what time frame we're in, what we're likely to expect moving forward. So that's my game plan. Cash, precious metals, diamonds, a little bit of crypto. And once everything has crashed, I would probably be then exchanging things for real estate. Now, not a lot. I'd probably buy 2 blocks. That's probably all I need. You don't want to, we're in a point, and this is a topic for another day. We're in a point now, we're in a position where real estate in Australia is not a good long-term investment. The regulatory changes that are occurring right now suggest that real estate investments are going to get screwed over more so than they are going to be benefited. I think landlords are going to be hurt in the long run owning a lot of real estate. So 1 or 2 blocks, something you can easily manage, something for you and your family to live in, and that's about it. That's my game plan. So whatever you think can be probably written down below. I think that is safe. I think it's probably the most smartest way to go about this. Under leverage yourself. Trade and barter. I don't want to go down that route of, we're doomsdaying, but if it is like it is, and I've got, let's say, $500,000 in diamonds, and I want to exchange that for a block of land or something, I'll be more than open to bartering that away, just as you would Bitcoin. Bitcoin is not money, quote unquote, not a currency that people have to accept. It's bartered away in that sense. The person who's selling the item has to accept the Bitcoin. It's not an obligated acceptance from the third party to accept Bitcoin. So the same thing, we barter that away and offer that in exchange for what we're looking for. Apart from that, that is my game plan. If I got anything else, I'll be sure to add it in the future. Talk to you soon.